Hello everybody. This is Arya Apte. Today we focus on our full syllabus, accounting and finance for managers. As we know, in the last few lecture, we completed all units one by one, and the important points are described to you systematically. So we just going for today's lecture. It's overview of full syllabus because your examination will be coming soon on 15th. So let's we start. Just I go to this page. Yes, in introduction to financial accounting, we already know what is the accounting and what are the meaning and what are the importance of accounting, which are the basic concepts which are covered in this first chapter. Let's we go this page. Yes, in introduction, accounting play an important role of business organization. In this chapter, we shall see the accounting is different type and accounting role. What are the role of organization and what is the deal form of the business organization accounting as a academic discipline and financial function. So these are the important factors. After that study, we should uh, distinguish between financial costing and accountancy. This is also covered in this chapter. The accounting is this is very important definition. Accounting is the art of recording, classification, and summarizing in significant manner, and it is term of money, transaction, and event, which are the part of list of financial characteristics and the interpretation, the result thereof. So this is very important definition of accountancy. After that, the evaluation of accountancy. This evaluation means what are the changes, what are the advanced techniques are coming in workplace. This is covered in this para. After that, importance of accountancy, they given one diagram which is very helpful. You just make thought of mind that this diagram in your mindset, so you solve this question very easily. After that, the financial cost and management accounting, the difference is here, which is very important difference to your exam point of view. Please make cover this financial, managerial and financial accounting difference. It is generally it is made for difference between the managerial and financial decisions, which is very helpful for any manager level accountant. Finance is a agent. Finance is the agent that direct the flow of economic activity and facilitate its smooth operation. So this is the very important definition. After that, they given accounting and other disciplines. Accounting as a career and profession means you can career on in accountancy with the help of when you nowadays we you come one master degree which is MBA, which is one of the option, and another is CA, which is chartered accountant. You can do the same for your career opportunities. This is explained in this para. After that, one important table is given. What are the sole trade? What are the forms of organization, and what are the differentiate between those in ownership, financial statement, auditing, regulation of accounting, and disclosure, suitability. Yeah, these are the all for the differentiation in this table. This table is very important your exam point of view, because in this, if you earn this table, then you earn all the forms of organization very quickly. So please note down, this is very important table. You can just go through it and make sure that this can be easy for your examination questioning. So according to that, you this finish our chapter first. After that, accounting principles are covered a going concern, consistency, and accrual concepts, which is covered in this para. After that, they given accounting policies. Accounting policies means the what are the policies which value of inventory, goodwill, and which are the covered all the factors of accountancy. Yes, generally, generally accepted accounting principle, which is one of the part. It is include accounting standard provide for law guidance issued by the regulation. These principle able under 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 lies in reporting, recording and reporting of the information, so that use once they are aware of the principle can read and understand the financial statement prepared by the diverse organization. Gap includes the accounting standard provides the law and guidelines issued by the regulator. This principle enables the standardization in recording of reporting of information, so that the use once they are aware of the principle can read and understand the financial statement, prepare and diverse the organization. So these are the after that they given one definition. You just go through it. After they given one table, what are the institution, which are the institution are make to make them to regularize of accounting process. So in India, the ICAI means Indian Institute of Chartered Accountant of India, which is a very essential institution for our accounting guidelines and updation. After that, the standing setting of board is Accounting Standard Board, which is ASB, which is situated in Delhi. These both are is situated in Delhi. After that, Canada, the Canadian Accounting Standard Board, and the institute is Canadian Institute of Chartered Accountants, CICA. After that, USA, this is a different Financial Accounting Standard Board, and American Institute of Certified Public Accounting, which is AICPA. After that, Australian Accounting Standard Board, AASB, the Institute of Chartered Accountant of Australia, which are the covered in here. After that, the International Financial Reporting Standard, they cover here. After that, if the guidelines, the accounting standard means the guidelines issued from institute to regularize accounting process. So these guidelines are make AS means accounting standard. There are various AS, but you given to one list. AS1 disclosure of accounting policy, AS2 valuation of inventory, AS3 cash flow statement, AS4 contingency and event occur after the balance sheet date. The net profit for the period item changes in accounting policy. Uh, After that, the depreciation accounting AS6, AS7 is for contracts, AS8 for research and development, AS9 for revenue recognition, AS10 for fixed asset, AS11 for effect of foreign exchange rates, AS12 accounting for government grant, and AS13 investment, AS14 amalgamation, AS15 financial statement of employers, AS16 borrowing of cost, AS17 is for segment reporting, AS18 related to party disclosure, AS19 is lease, AS20 for earning per share, AS21 is consolidated financial statement, accounting for tax and income, accounting for investment in associated in consolidated financial statement. So these are the very important accounting standard which are given in your textbook. You just go and refer very easily. After that, AS24 is disclosure of operations, AS25 for interim finance report, AS26 for intangible asset, AS27 for financial reporting and interest in joint venture, and so 32. So these are the list. It's covered here. After that, we go for unit number 3, presentation of financial statement, balance sheet. They differentiate between capital revenue and deferred revenue expenditure. which are the part of accountancy. Capital means which are related with your expenditure, which is related with capital. Revenue means your monthly and yearly expenses, and this related expenditure is related with revenue. And deferred revenue also one of the part. They are differentiate between three, and as per the asset is resources that controlled by the entity as a result of past event. For example, purchase and self creation, the form which future economic benefits, inflow of cash and other assets are expected. So these are the importance. Asset, fixed asset, investment, current asset, fictitious asset, and contingency. Fixed asset, which is tangible, intangible. Tangible means land, building. Intangible means software, trademark. These are the fixed asset for intangible. For investment, the long term and short term. Current asset, raw material, uh, current assets like they given cycle, raw material, cash at bank, sorry, raw material, we purchase raw material, after that we make furnished goods after these data coming. And lastly we have cash. So this cycle is completed. So current asset cycle is given here. Fictitious assets are not asset in a real sense, though they are disclosed asset side of the balance sheet. They represent the loss which are not written. Company formation expenses, sale, share, debenture issue expenses, which are the not fixed, not they are the expenses but not covered in this asset. Contingency means they are suddenly come in to occur. Those assets are existence and value of which they depend upon occurs in specific event or on a performance of specific. For example, compensation claim and service provided which may be received in a court decision. So these are the contingency. After that, the liability also described in different parts. One is owner's fund, long-term liability, current liability, contingency liability. So owner's fund are the amount payable to owner. It is considered as a liability due to any entity concept or the accounting which assume business as a separate from of owner, and hence the amount contributed by the owner is considered as a liability for the business. Owner's fund is equal to net worth is equal to proprietor's equity and equity. So owner's fund is equal to capital plus reserve. Owner's fund is equal to capital plus accumulated profit. So these are the terms for accounting funds, owner's fund. After that, long-term liability, which are secure and unsecured. Current liability means the short-term current liability, those liability which are to be repaid within a period of 1 year. This usually form of nominal business transaction. Current liabilities include bills payable, creditors, outstanding expenses. Creditors represent the accounting payable of organization for the period purchase made. It is also the accounting payable, trade payables, and trade creditors. So these are the current liabilities as provided. Contingency liability. Contingency liability means these are the actual liability, but they are become a actual liability depend on the occurrence of certain events which are uncertain. There are not recorded in balance sheet but shown by way of footnote by the bottom of the balance sheet. Suit on damage against company. The bill received disclose etc. The format of balance sheet is given here: capital loan, bank overdraft, bills payable, sundry creditors, outstanding expense. So these are the liability side. In asset side, goodwill, land and building, machinery, furniture, closing stock, bills receivable, sundry debtors, cash at bank, cash at in hand. These are the all asset side items. After they given vertical format of balance sheet, which are same, but this is only vertical. They given one problem. They given list. You just differentiate as per the situation and calculate the asset employed. Vertical format. After that, they given various problems which are you solve your own. Sorry for disturbance. They given various practical problem also. You just go through it. After that, they given income statement and what are the income statement importance they given. Profit is equal to revenue minus cost, which is the formula. Sale of goods, reading, rendering of services, interest, royalty, and dividends, which are the parts of revenue arise. Format of profit and loss they given in vertical format. In the examination, you can solve this. PBIT means profit before income, interest, and tax. PBT means profit before tax, and these are the important factors in a vertical format. So these are the income statement and solution also given here. You just go through it. After that, next chapter is mechanics of accounting. In this the deep knowledge of subsidiary book, ledger, and trial balance, which are the basic concepts in accountancy. Firstly, you can solve journalize the transaction. After that, with the help of journal, you can proceed for ledger. The ledger is also based on subsidiary book. Subsidiary books means minute items like petty cash book, purchase, sales return. These items are covered in the subsidiary book. After that, the journal paper are covered, trial balance are covered. After these are all are covered, the BRS also covered. BRS means bank reconciliation statement, which is also part of the mechanics of accounting. For all all the books are clear and make correct. After that, you can make the final account, which is the final stage of accounting. Yes. Various practical problem is here. You make sure to you make sure that you are solve this, because if the offline exam is here, that time you get these problems and you solve very easily. After that, unit number 6, fixed asset and depreciation of accounting. In this, the method of depreciation like fixed and installment, diminishing and reducing balance method. The accounting treatment, reducing depreciation in assets, recording depreciation, provide depreciation account, recording sale of asset, and changing the method of depreciation. These are covered in this chapter. Depreciation means what? That your asset value is not the same for every year, because for the updation and for making correct formation, you can regularize the value of this asset, which here and there expenses are covered, and for that the asset value is reducing day by day. So this calculation is covered in depreciation chapter, which is make you to exact value of this possible effect. They given different methods like fixed installment, reducing balance, machine hours method, sum of year digit method, depreciation fund method, insurance policy method, annuity method, and provision for depreciation method. So these are the very important methods which are covered here. After the sixth unit, the units number 7, company accounting and the share. Yes, share are basically three types. Basically two types: ordinary share and sorry, three types: equity share, preference share, and ordinary share. So equity share are called equity shareholders, and these are the real owner of company. After that, the preference share, which is only for profit. When profit is occur in company, at that time only the preference shareholder can receive their share. But equity share are not this type, because they are the real owner. They can share loss also, and profit also, and risk also. So these are the real owner. Ordinary share, which is the third part, which is basically for ordinary effect of share capital. After that, they given the debenture. After that, the accounting share and debenture. Debentures are the creditors of company. They given you loan. They call debenture holder. They given amount of money, and you just pay interest on that and the amount at the end. So the debenture holders also one of the external liability for us. This is the explanation of detail in your chapter. Next chapter is company account for financial statement. Yes, with the help of the share, you can make the format of income statement, which is basically for what is the various factors are covered, and finally, and they make the final account of those situated effect of our company's account. So firstly, the balance sheet, which is basically for uh, various schedules, and this is covered in here. After that, the cash flow statement. Cash flow statement is also one of the part. In this flow, the operating activity, investing activity, and financial activity are covered. After that, the financial statement analysis, which is wholly based on ratios which are covered in quick ratio, current ratio, and various ratios which you can calculate, and you can judge your financial activities year to year, month to month. So this is very helpful for us, which is given here. After they given some standard cost, which is part of costing. And last, they given capital budgeting, which is also part of capital budgeting. Means in future you can make to calculate and plan for good accounting conditions. Last, working capital management. Working capital management is also the one of the important part, which is basically for working capital, means current asset minus current liabilities. This is working capital. So now we stop here. We can make this correct action of financial treatment. So all the best, guys, and make sure you can make perfect marks in your examination. Thank you.